That is pretty much how my week went. Hi guys, welcome back to another video. If you're new here, my name is Matt L. I'm a full-time Forex trader living in Montreal, and I'm also studying naturopathy on the side. So yeah, this week was pretty boring except for Sunday night, and we're going to get into exactly what happened on Sunday. So normally, as most of you guys know on these videos, I go over the trades that I took this week, what I didn't take, and I only took one trade, which was a buy on EN, which is still running, and it's running like 15 pips. And it's been running all day, so it's been running super slow. So instead this week I want to dive into something a little bit deeper than normally, and that is what happened on Sunday, which was a major crash in gold Sunday night into Monday morning Eastern time, and it was pretty wild. It dropped almost $200 in like minutes. It was wild. So I want to head into the charts and show you the move that happened, how it slowly corrected itself, and even more importantly, why this happened. If you've been watching my videos in the last few weeks, you'll know that August and late July is typically a very slow month, and that is for a couple of reasons. I have a video on how to trade in August, somewhere around here, where I talk about that in more depth. And if you guys watched that video, I really hope you didn't get burned by gold. And this is a perfect example of what can happen. It doesn't always happen, but what can happen in really low volume and low liquidity environments. And it's pretty dangerous. I know a lot of people blew their FTMO accounts, their funding talent accounts. They had huge drawdowns in their personal accounts, and it got really nasty really fast. Fortunately, I didn't have any pending set, and I was totally fine. But for those of you that did struggle, my heart goes out to you. It's a very difficult thing to go through. So in this week's Forex Friday, we're going to do exactly that. I'm going to bring you guys into the charts with me, and we're going to look at exactly what happened. So we're going to talk about fundamentals and what drove this movement. And it was really a perfect storm. Starting out for this perfect storm, what happened was this all really began last Friday when we had the unemployment rate, which came out much stronger than expected. Now, what happens when we have strong unemployment? Well, the expectations for rate increases and tapering of quantitative easing started to increase. Now, this really scares the market as it's gotten really accustomed to cheap and free money. So the fear of interest rates rising sooner than expected, Berkshire Hathaway is now pricing in a 55% chance of there being an increase in December. The market starts to price this in, and they get scared. So the reaction to this really carried over into Sunday market open Australia time, and it drove a stronger US dollar, which of course weakens gold. So that was really the first thing. Second thing is COVID fears. We're seeing more and more vaccine passport mandates being implemented. This is really bringing a lot of uncertainty to the market, especially with the rise in the Delta variant, how it's becoming more and more known that vaccinated people can not only get COVID, but can spread it as well. There's still a lot of uncertainties, and of course the market doesn't like uncertainties, and gold tends to trade as a risk asset. And so with that increased risk, gold dropped. A third reason for the gold crash was the rise in Bitcoin over the weekend. This made gold a less attractive asset to invest in, and more people flowing into Bitcoin. And finally, the last thing is there was just some major contracts that were sold on the gold market. There's a few different headlines that showed that there were some major contracts in gold being sold. So this was really the perfect environment. Normally, all of these catalysts put together would have led to a drop in gold, but since it happened at this time of year when there's really low liquidity, it just tanked it. And so in hindsight, you could have not really seen a move of this size coming, but you could have seen a move in gold of some significance coming, especially since we've been consolidating for quite some time now. So those were the main fundamental reasons for the gold crash. If you didn't know why they happened, maybe take a couple of notes. It does happen at least a couple of times a year when we do get a move of this size. Now, I really did want to buy the crash, but it was really quite risky, and I was lying in bed thinking, oh, this would be such a good opportunity. But then I just realized I didn't blow my account, I didn't lose any money, and I should just be grateful for that. So if you did happen to buy at some point and didn't get wiped out, congrats for you. It did pull back and you probably made a decent amount of money. So I hope that clears things up for you in terms of what happened with gold fundamentally. I want to hop into the charts and show you a thing or two, what I was looking at, how it reacted the rest of the week, and that is really it. This is typically one of the slowest weeks of August, and because of that, it's one of the slowest weeks of the year. So I'm hoping that in the next few weeks, things start to pick up again, and I'm really excited for fresh trading in September. So with all of that being said, let's go look at the gold chart. Okay, so like I said, the first thing that we're going to go over is gold, and we're going to see technically what happened in connection to all of those fundamentals that I mentioned. So as we can see here, we're on the daily, we have this really strong sell-off. But if we drop down to the 4-hour, what we can see is the sell-off that first began last Friday with the unemployment data and the unemployment news that came out stronger than expected. We got this really strong sell-off as a result of increased expectations of rate hikes coming out of the States and from the Fed. That strengthened the US dollar, and as a result dropped gold. Now what happened was we got this really strong sell-off in gold, and I was looking to take a buy at this green box area at 17.55. I was hoping that it was going to hit later in the day, late afternoon, as people would have been closing their short positions, and this would have offered a little bit of a pullback and a little bit of a profit-taking area. Now what happened was we came really, really close before we got this very small pullback, and so I of course did not execute the trade because of it. Fast forward to Sunday night and Monday, we of course came to this area, and I did not take the trade because of the fact that we came so close to hitting it come Friday. It was just too risky for me, and I wasn't going to take it as a result. But the reason I had this area was for a few reasons. First off, we had a trendline third touch. Trendline coming across from here. We had a key level as well. This was a previous low and a really strong support. And additionally, it was a round number at 1755. That 1750 area would have acted as a good psychological level. So what happened was we dropped, of course, very much on Sunday night, all the way from 1760-ish to 1680. So really a strong drop, and we pulled back at 1680. Now I saw a few traders online that took the buy at 1680, and the reason they did so was because of this support level right here. So if you're one of those traders, good on you, that was fantastic. I was watching it when this hit, but I didn't take it for the reasons that I mentioned. The spread was really, really wild, and I do know a few traders that got wiped out almost immediately after taking the buy because the spread was so large. So it was just risky, and honestly, a little bit of gratitude goes a long way. I'm just grateful that I didn't have a pending set or an order, that I didn't take an order and get completely wiped out. So I'm very thankful for that. But if you did grab 1680 or you saw somebody grab that area, it is really because of this support level. Now later on in the week, we pulled back all the way up to 1750. Now there's not really a strong fib. It is the 50 fib, and it has reacted. So this would have given a few pips if you took this trade, but it was just 1755 and a 50 fib, a little bit of a key level, so you could have absolutely taken that trade. I didn't, but as you can see, it gave some good pips. It kind of hit, moved a bit, and then maybe I would have closed at break even, and then it would have worked later on. But that is gold in a nutshell. The only other thing that I want to go over this week is the only trade that I took, which was a buy on EA. Now we'll start off on the 4-hour, and as you can see, it is, if I get rid of this fib, it was a buy on this green box area here. So as you can see, it was a key level from this previous low. It was a round number at 1.590, so a very strong psychological level, and it was a 50 fib from, so that was the 50 fib right there. And there were potential daily EMAs lining up, but if we hop onto the daily, you'll see that they weren't quite there. The trade hit a little bit too soon, but nonetheless, this worked out really, really well. The trade, as I mentioned on my Twitter account, was really slow moving. It hit here, and after roughly like 6 hours, I was up 15 pips or so. And so I did consider closing the trade early just because of the slowness of how it was moving. But fortunately I didn't, and I closed it at plus 30 pips. Of course, it went on to do a significant amount more, but at the rate that it was moving and the fact that we came rather close to it previously, the area, and then moved, I was happy to take my 30 pips and run. Now this purple box area here, I do want to mention, it was a really potentially strong sell area, but I did not take it. The reason for it is it was a 38 fib that worked perfectly. It was, when I first had this area drawn up, it was really just because there are a bunch of weekly EMAs there. It wasn't a 38 fib, but when we started to pull back, it was late Sunday night or early into Monday, and I tend to be a little bit skeptical and a little bit hesitant to take trades at that time of the week. But this fib did form, and it was a 38 fib with the weekly EMAs, and it really turned out to be a good trade. So if you caught that, good on you. If I show you the weekly EMAs, they are right here. So it is very possible that this area will continue to hold and another trade setup will present itself. However, the area has been used, so I'll be a little bit skeptical. I'll be drawing the fibs and keeping an eye out on that. So that is it overall for what happened this week. It was a slow week. I only took that one trade on EA, but Sunday into Monday was very exciting with gold. So I hope you guys learned a thing or two. Maybe you can keep this in mind next time that something like this does happen, which isn't very frequent, but it is at least a couple of times a year that something like this does happen. So I hope I was able to help you guys out in that sense. I hope you had a good week, and if you made it this far, as always, guys, you have my gratitude. I'll see you in the next video, and until then, peace.